Hi, this is a video on how to sell a covered call on the Robinhood app. The stock we're going to do the example on is SoFi. So I'm at the home page on Robinhood. I'm going to go ahead and scroll down to my stocks that I own. Remember, you have to own 100 shares of a stock in order to sell a covered call on it. I'm going to click on SoFi. A couple of the things I like to look at are the technicals of the stock. So to view the technicals on Robinhood, there's that button with the two arrows and the circle around it. I'm going to click on that. At the top, I'm going to scroll over. I'm going to click on the Bollinger Band. I'm going to look at the 3-month chart. I like to look at the 1 month and 3-month chart, but you could look at all of them to see what the trend is at. Here for the 3-month, if I go ahead and click on the chart, it will give us the upper portion of this Bollinger Band, which is at $9.44. Since this is an example of selling a covered call, I like to keep my covered call that I'm selling above the upper portion of the Bollinger Band. Because remember, stocks like to trade within the Bollinger Band. So when I'm selling a covered call, I would like it to be above the $9.44 as a rough estimate. I'm gonna go ahead and click back. Click on that same button again. We're gonna go ahead and look at the RSI. I'm gonna click on the RSI chart. We can see that the RSI for the 3-month chart is currently at 42. When selling a covered call, we like that to be closer to 60. So 50 to 60 is a good spot or a good reference when you're selling a covered call for the RSI. RSI that's close to 50 or 60 shows that the stock is being overbought. I'm gonna go ahead and click back. So to sell the covered call, I'm going to go ahead and click trade options. Our strike date is going to be February 16th. At the top here, you want to make sure it's on sell and call. Again, that's important. You're going to want to make sure you're the seller and you're selling a call. The current share price of SoFi is at $7.70. The call we're going to be looking at is for $11.50 for February 16th. So I'm going to go ahead and click on that. A couple of the things I like to look at are the delta. The delta for this stock is at 0.1367. I like, when I'm selling my covered calls, for the delta to be anywhere between 0.1 and 0.2, and this fits right in between that. You can look right above that, the chance of profit is 92%. So I have a 92% chance of winning this trade. The other indicator I like to look at is the implied volatility, the IV. I like the implied volatility to be greater than 40. We could say that this one's greater than 40, it's at 140%. And then I also like to look at the volume. The volume I like greater than 100 because it's easier to trade the stock. And we can see that this volume is at 3,570, so that's definitely greater than 100. The volatility, the reason why I like that greater than 40 is because you get more premium or you get paid more money to make this contract. So I'm gonna click sell to move forward. We're gonna sell one contract. Remember, each contract is 100 shares and you have to own those 100 shares before you're selling a covered call. We're gonna do the limit price in between the bid and ask price. So we'll do 0.15. So we're gonna be making $14.97 for doing this one contract. I'm gonna click review and I'm gonna swipe up to complete this contract or to complete selling this option. It's gonna go to the order queue because I'm doing this on a weekend. So the next step is to monitor this trade. Ideally, when I'm selling a covered call, I don't like to sell my 100 shares of the stock until I've owned it for at least a year because you get lower taxes that you have to pay on it. So we're gonna switch it because I don't have a really good example of a covered call with SoFi yet. I am selling a call on Square, so I'll click on that. To monitor your covered calls, you're going to do a quick calculation of the intrinsic and extrinsic value. If you look at the top of the screen, first it shows Square's current price, which is at $65. The next, it shows the Square contract that I did is $65. And then below that has $8.60. That's currently what the contract's worth, is $8.60. So to calculate your intrinsic value, you're going to take what the current price is of Square and you're going to subtract it to what your contract price is. So this would be the current price of $65 minus the current contract price, which is $65. So we'd get 0 for our intrinsic value. And then for the extrinsic value, we have $8.60. So this stock still has a lot of extrinsic value on it. So technically with this trade, I'm not doing anything with it. I'm just monitoring it. Now, if we wanted to roll it, we would want to do that when the extrinsic value is less than 10% or around 10% of the current contract price. So if we did the calculation of the current price minus the call price that we have, that would be your intrinsic value. And then you would subtract that intrinsic value from what the current price is at, which is $8.60. So let's say we got a intrinsic value of $2. If those two numbers were different, we'd subtract $2 from $8.60. And so we would have an intrinsic value of $2, and our extrinsic value would be $8.60 minus $2. So that'd be $6.60 of extrinsic value, and we'd have an intrinsic value of $2 if Square was trading at $67. And the rest of the numbers remain the same. So when you're doing the calculation, if your extrinsic value that you're getting is around 10% or less of the current contract price, that's when you would consider rolling it. So if that were the case with this and I wanted to roll it, I would click trade. I would click roll position. So I'm going to be paying $8.60 to get out of this position. So I'll click select new position. And if I just wanted to extend the time but keep my current strike price of $65, let's do September 20th. And we'll look at the $65 call. We're going to be getting $11.15 for doing this contract. So just to go back, we'd be paying the $8.60 to close out the current contract, but to open up a new contract for September 20th, for that same strike price, we would be getting paid $11.15. So again, I'll click on that. I'll click roll, and this is saying we're going to receive a net credit of $2.55. And remember, that's one contract, and each contract's 100 shares. So you times that number by 100 to get in total net credit of $255. And the only thing we did with this is just extend the time on it. So if I wanted to continue on, and for this example, we're going to click continue. We're going to do one contract. We'll go in between the bid and ask. So we'll do $2.55. We'll click review, and we're going to swipe up to complete that contract. In this video, we covered selling a covered call, monitoring a covered call, and how to roll a covered call.